March 19th, 2020, a global pandemic swept the world. Terrifying headlines flooded the airwaves. Hospitals collapsed, streets stood empty, and economies around the world began to fall one after another. But in South Korea, a nation that was just hit by sudden financial panic, a quiet revolution began to take shape. A revolution that would soon shake the financial markets in ways no one could have imagined.
Over $1 billion poured into the stock against the tide of panic selling.
A small group of young people with no financial education decided to bet against the giants of global finance. The message spread like wildfire, and in no time, they grew into a massive, unstoppable movement. They were called the Ant Army.
The Ant Army.
The Ant Army.
Armed with nothing but their smartphones and a desire for a better life, they were about to do the unthinkable. This is the incredible story of how a group of desperate Koreans became a financial force that would change history forever. To understand a fire, you first need to feel the heat that came before it. Picture South Korea in 2019. A nation of big dreams. The subways in Seoul were packed, the streets a river of headlights and business, and tall, shining buildings reach for the clouds, showing off decades of amazing economic success. It sounded like success, a constant hum of activity. But inside that hum, you could feel a quiet desperation. This was a generation that inherited the pressure of their parents' success, but not the easy chances that came after the war in the 1950s. They were told to study harder, work longer, and aim high, only to find that the latter had been pulled up. For young Koreans, owning a home, the biggest sign of stability, had become just a fantasy. They had a name for their difficult reality, Hell Joseon, a bitter nod to a very strict time in their history. It felt like being born into a game you were set up to lose. Apartment prices in Seoul, pushed up by fast buying and selling and unfairness, had shot up unbelievably high. Even a modest family apartment could cost what an average person earned over a decade, an impossible climb. It created deep, widespread anger. At the same time, the solid job security that older generations once relied on was disappearing. The intense competition didn't stop after college. It became a daily struggle. A lifetime of loyalty to a company no longer meant stability, just the constant fear of being replaced. Even those who had done everything right weren't spared. People who had spent decades saving their earnings now saw their bank accounts barely growing.
Korean banks have recently been lowering interest rates on savings accounts. Uri Bank, one of Korea's 4 major banks, has cut its interest rate for time deposits by 0.1 percentage point to 1.9%.
Interest rates, the small rewards banks give for saving, had fallen so low they felt meaningless in the face of rising costs. The safest path had turned into a dead end. They were people desperate for any other way, any other shot, no matter how risky. They just needed a spark. Years of quiet resentment, the gnawing feeling that the promise of a better life was just out of reach, had built a dry tinder. The world was about to provide the match. That match came in March 2020, a global shock. As the global pandemic spread, reports told shocking stories of empty city streets from Milan to New York. In Seoul, the busy areas went silent. On the global stock market, the value of every company plunged, showing a deep, stomach-lurching red. And in South Korea, the Kospi, the country's main stock index, suddenly went into a terrifying freefall, dropping to levels that screamed disaster.
South Korean stocks plunged again on Monday, rattled by the Fed's surprise rate cut. South Korea's benchmark Kospi fell 3.19% to close at around 1714.
South Korean stocks are also plunging on Thursday. As of 2:30 p.m., the benchmark Kospi had fallen nearly 4%.
A stock is simply a small slice of ownership in a company. The more you hold, the bigger your share in that company. Its price is driven by supply and demand. It goes up when many want to buy, and drops when people rushed to sell. The big money managers, the foreign investment groups who had treated the Korean market like an easy cash machine, panicked. They fled, pulling enormous amounts of money out of the country as if it were a burning building. At the same time, the government, desperate to stop the economy from completely freezing up, made a huge move. They slashed interest rates to historic lows. The goal was simple: to make saving less attractive and push people to spend or invest instead. Anything to keep the economy alive. It meant that the little returns savers were getting before now became almost non-existent. Their money earned next to nothing sitting in banks. It was a technical decision, but for a generation taught that saving was a good thing, it felt like a betrayal. The government, the banks, the whole system seemed to be saying that the rules they had lived by were now a joke. In that single moment, everything changed. The old rules were broken. The stock market, the very place the experts were running away from, suddenly looked like the only place left to run to. It was a terrifying choice. It meant betting against the smartest investors in the world. The market was a chaotic and scary battlefield. But in that chaos, a few ordinary people saw an opportunity to do something extraordinary. People who would soon grow into millions. A new force began to rise from the ashes. Quiet, ordinary, relentless. A movement was about to begin. One that would soon rewrite the rules of the financial world. It started with young men in their 20s and 30s, people who already felt like they had nothing to lose. While institutional investors and foreign funds were rapidly selling off shares of giant companies as if they were worthless, these individuals saw it as a once-in-a-lifetime opportunity to buy them at a temporary discount. Some came with prior market knowledge, others with none at all, just motivation and entrepreneurial spirit. As soon as the early adopters started making money, they shared screenshots of their gains in forums, on YouTube, TikTok, and group chats. And the public conversation quickly shifted to portray investing as something anyone can do. With advanced technology and user-friendly trading apps, buying and selling stocks became a daily routine accessible to all. This early spark didn't just stay online, it spread fast. One person's gain became a family conversation. A cousin joined, then a coworker, then a neighbor. Word spread through lunch tables, cafe chats, and late-night group messages. It wasn't a campaign, it was a chain reaction. And behind that wave was one simple message: the foreigners are panicking. They are weak. They are giving up on us. This isn't a crisis. This is a once-in-a-lifetime deal. What unified this movement wasn't leadership or symbols. It was a rapidly growing crowd, connected through screens, ideology, and a shared sense of purpose. Over 3 million new investment accounts were opened in 2020 alone, a historic spike that revealed just how massive and fast this uprising had become. By the following year, nearly a third of the nation, over 13 million people, held investment accounts. This wasn't just a small group of active traders. This was everyday society. It was mothers investing between school runs, office workers checking company values during their lunch breaks, and retirees risking their savings for one last chance at security. The media gave them a name: the Donghak Ant Movement. The name combined two especially powerful symbols. On one hand, ants, small, almost invisible on their own, but when working together, a mighty force capable of moving mountains. That's exactly how these new investors saw themselves: the backbone of the economy, no longer to be ignored. On the other hand, the word Donghak reminded Koreans of a historical struggle, a 19th century peasant rebellion, where ordinary people tried to defend their land and lives from foreign powers. This connection wasn't accidental, because these modern investors also felt they were fighting for economic independence. Many still remember the national humiliation of the late 1990s, when Korea suffered a deep financial crisis and was forced to sell off local companies to foreign interests in order to survive. Now, in their eyes, buying stocks wasn't just an investment, It was a patriotic act. Their impact was complete. They shared ideas, translated foreign news, and figured out which companies were being sold off most heavily by foreign funds. Then, they coordinated their buying to directly counter that selling pressure. By mid-2020, they were responsible for roughly 70% of all trades on the Korean stock market. They weren't just a small part of the market anymore. For a moment in history, they were the market. As the big investors sold off billions of dollars worth of shares, the ants became a massive wall, buying almost all of it with billions of their own money. They bought shares in the companies deeply woven into their daily lives: Samsung, Hyundai, LG. It wasn't just about making money. It was about taking pride. These were the companies that powered their homes, filled their streets, and built their future. It was about supporting their own country financially. But it was also about the powerful roar of a generation that had been quiet for too long, finally finding a way to fight back against a system that had let them down. Amazingly, it worked. The sheer power of their shared will stopped the decline. The sea of red on the stock market screens began to flicker, and then, unbelievably, it turned green, meaning that for the first time since the outbreak of COVID, the Korean stock market had started to rise again. The ants, the everyday people, had looked into the abyss and hadn't flinched. They had saved their own market. They had won the first battle, a victory that felt sweet and powerful. But as the saying goes, appetite grows with eating. And after an unimaginable victory, Korea's ants were intoxicated with success. Driven by euphoria and a sense of invincibility, they are about to take one bold step that would etch their name into history. Their success in the Korean market gave them something rare: belief. For once, ordinary people had outplayed the professionals. That victory didn't just bring money, it brought momentum. But even with their success, Korean companies had their limits. They suffered from low dividends, meaning companies paid investors back only small portions of their profits, along with structural issues and a lack of transparency. It all left a slightly bitter aftertaste for the ants, who were already looking ahead. And soon, the ants began to wonder, if we could win here, what could we do in the biggest market in the world? Their invasion of the global financial world was fast and almost fanatical. They even earned a new name, Sahawk ants, a nickname for Korean investors who shifted their focus from local stocks to US giants. News told incredible stories of American tech companies. These stories generated awe in millions of Korean homes. They weren't just seen as company successes, they were viewed as prophecies of a new world. And one name became more than just a company to invest in. It became a new kind of obsession. That name was Tesla. To the ants, Tesla wasn't just a car company. It was a promise. Traditional investors looked at financial reports and how much money a company was making. The ants looked at the big picture, the vision. They weren't buying a company. They were buying a story of a better, more thrilling future. This was a sharp contrast to the companies they knew at home. The large, old-style Korean family-run businesses, while powerful, were often seen as rigid, stuck in old ways, and caught up in scandals. These were companies that had ruled the economy for decades, but from behind closed doors. Promotions were based on seniority. Innovation moved like molasses. And for the younger generation, there was no room to dream. Tesla felt like the opposite of that. Fast, wild, open. A future they could actually belong to. So, to own Tesla shares wasn't just a financial choice, it was a statement of belief. By early 2021, their combined ownership in Tesla had exploded to billions of dollars. This flood of money made the Korean ants one of the biggest shareholders in the company. A new routine took hold for millions, staying up late in nervous excitement to watch the market open in New York. Their certainty went against all logic. When 2022 became one of Tesla's worst years, the ants didn't flinch. While the traditional financial world saw a tech bubble bursting in real time, They saw a bargain, a rare chance to buy their favorite company at a discount. The defining moment came in May of that same year. As Tesla's stock chart continued its steep decline, money from South Korea began flowing in the opposite direction. Over $1 billion poured into the stock. And they didn't stop there. Throughout the rest of the year, the ants kept pouring more money into the bleeding stock. Less than 2 years later, they owned roughly 1.6% of Tesla, a staggering figure by any measure. At times, their trading activity was so massive, it disrupted the rules of the game and made up a significant share of Tesla's global daily trading volume. Their conviction never wavered, and their impact could no longer be ignored. Their buying power seemed endless, but soon, the ants' euphoric high would come crashing down. A dark turn was approaching, one fatal mistake that would leave a lasting scar on financial history and flip the entire game. Behind the wave of frenzied buying, there was a darker truth. The ant army was marching on a mountain of borrowed money. The term bitu, investing with borrowed money, became a celebrated way to play the market. It wasn't just a strategy born from wanting more. For many, it came from a deep, desperate place, a belief that this was their only chance to catch up in a society that had left them behind. The social pressure was huge. In online forums, a trend of proof shots emerged, where users would post screenshots of their amazing gains from using borrowed money. These posts would spread like wildfire, creating a harmful cycle of envy and the fear of missing out, encouraging others to take on even riskier levels of debt to keep up. The forums created their own slang, their own heroes, those who showed the biggest wins, and their own villains, those who sold out early. To question the group's thinking was to be cast out. This powerful group mentality created a feeling of being untouchable, a shared reality where the usual rules of risk simply didn't seem to apply. This wasn't just numbers on a screen. This was the down payment for a family home, a child's college fund, a parent's retirement, all of it riding on a roll of the digital dice. In the very first year of the pandemic, official loans from investment firms, money borrowed directly to purchase stocks, had climbed to extraordinarily high levels. This didn't even include personal bank loans, credit card debt, or money borrowed from family, all flowing into the same roaring fire. While the community cheered online, the risk itself was deeply personal and lonely. It was the feeling of staring at your phone alone at 3 a.m., your family asleep in the next room, with a loan that could ruin them hanging over your head. This river of borrowed cash flowed into the riskiest parts of the market. The ants fell in love with investment products designed to multiply gains or losses, financial dynamite. If a company's value goes up by a small amount, these products could make your investment go up by 3 times that. But if the company's value goes down by the same small amount, you could lose 3 times as much of your money. It made everything more intense and far more dangerous. You could double your money in a week, or you could be wiped out in an afternoon. But the ants poured in, at one point owning a huge portion of some of the most popular high-risk funds in the global market. Regulators watched in horror. They saw a whole generation hypnotized by early wins and trapped in the echo chamber of online forums, making a huge collective bet that could go terribly wrong. Inside those forums, it was a party at the edge of a cliff. Doubt was unthinkable. Selling for a small profit was seen as weak. You were shamed as having paper hands. The only rule was diamond hands. Never, ever sell. They ignored every warning sign. But all towers built on debt eventually have to face the music. What came next wasn't just a reckoning. It was a turning point that forced Korea to rewrite the rules of the game. The sound of the market booming was like celebratory music that never seemed to end. But as 2022 drew to a close, that music came to a sudden, screeching halt. Governments around the world, including Korea, began raising interest rates to slow down the rising cost of living that had spiraled during the pandemic.
The Bank of Korea has raised the key interest rate to a range of 3.75% to 4%. As central banks around the world have accordingly raised their own rates.
When interest rates go up, saving money in the bank becomes attractive again, since the returns are higher. That encourages people to save more and spend less, which reduces demand and helps bring prices down. But there's a flip side. As saving becomes safer and more rewarding, many people move their money out of the stock market, causing prices to fall. And that's not all. Higher rates also make borrowing more expensive, which hurt many of the ants who had been taking out loans freely during the boom. The high-flying technology companies the ants cherished were the first to be crushed, and Tesla, their beloved symbol, plunged from the sky, losing more than half its value. The complex investment products that had promised so much wealth delivered only ruin, wiping out life savings with brutal speed. The dream was over. The frantic, hopeful energy of the online forums faded. The triumphant proof shots were gone, replaced by quiet stories of loss, of demands for more money from their brokers in the middle of the night, of a future that had vanished in a puff of smoke. There was a period of national shock, as the news filled with government warnings and sad stories of families who had lost everything. It felt like a deep betrayal, not just by the market, but by the dream itself. For some, the loss was personal and paralyzing. Their accounts wiped out, their hopes crushed. But the ant movement didn't die. Instead, it underwent a painful, harsh education in the realities of money. The government, finally shaken into action, came down hard. You could almost hear the gavel strike as they rolled out a powerful new system to find and stop illegal trading practices. They passed strong laws, promising huge fines and lifetime bans for anyone who tried to unfairly control the market. Additional measures followed, including restrictions on borrowing money to buy stocks and new requirements from Korea's financial authorities for greater transparency, built-in risk warnings, and platform adjustments tailored to younger investors. The Wild West of investing was being brought under control. The excitement may have faded, and some ants abandoned the financial world as if it had been a passing trend. But many stayed in the game, this time more experienced, more educated, and more cautious, having endured a brutal trial by fire. And something remarkable had changed. For the first time in history, small investors were taken seriously. Their voices were heard. No longer dismissed as amateurs, they became a legitimate force. So much so that they successfully delayed a new tax the government had planned to impose on retail investors. They also pressured regulators to extend a ban on short selling, a controversial method of betting against a stock, a way for investors to profit when stocks fall, which many ants believed had been abused by institutional players during the chaos. The government eventually introduced new rules, and several entities faced investigation. But not everyone learned the lesson. A large number of ants simply found a new and even wilder arena to place their bets: cryptocurrency. In recent years, there's been a sharp rise in crypto investments among Korean retail traders, with billions of dollars flowing into digital assets. Proof that the hunger for life-changing wins hadn't disappeared, only shifted. So what's the lasting impact of the ant army? This was more than just a financial event. It was a huge cultural shift. It forced a national conversation about economic unfairness, how well people understood money, and what a good life truly means in modern Korea. Suddenly, financial news wasn't just for experts. It was talked about at dinner tables. Parents and children discussed investments. Online videos explaining how markets work became hugely popular. A painful, nationwide crash course in finance had begun, born from the ashes of that huge wave of risky investing. The question was whether people were learning the right lessons. They proved that millions of ordinary people, united by technology and a shared goal, could stand up and shake the foundations of global finance. But they also learned that the rules of risk are unforgiving. Their story is a powerful reminder of hope in a world of unfairness, and the dangerous appeal of hype in the digital age. They shook the system. But in a game built by giants, was that ever enough to win? If you enjoyed the video, hit subscribe for more content like this. Thanks for watching.